If you don't understand market structure, you are just guessing in the market. In this video, I am going to guide you on how you can actually read the charts like a real trader, like a pro. Welcome to the Fellow F Academy, where trading is made simple. If you want to understand how the market actually moves, subscribe now. Click on the subscribe button because I'm dropping gems like this back to back. Just from my free YouTube content, you can actually understand trading and start making some significant profits from the financial market. So, on today's video, we are going to be talking about market structure. What is market structure? Market structure is simply the patterns of how price moves. Very simple. So price moves in trends, pullbacks, breakouts, and reversals. Understanding this makes you understand or makes you know whether buyers or sellers are in control of the market. So that is exactly what I'm going to be teaching you in this class today. And after this class, you'll be able to read market structure like a pro. See you in the video, guys. Let's go. All right, guys. So this is Forex for beginners, okay? So as a beginner Forex trader, the first thing you need to understand is market structure, okay? So here on market structure, we'll be talking about trends, okay? So you need to first understand the different types of trends we have. So the first type is an uptrend, we have a downtrend, we have a consolidation or a ranging market, okay? That's very simple. So we'll go straight to what an uptrend looks like, okay? So what makes an uptrend? It is simple. Higher highs and higher lows, all right? Once you see price creating higher highs and higher lows, you have to understand that we are in an uptrend, okay? So if you look closely, you see HH and HL, HH, HL. All these HLs and HH means simply means higher highs, while HL means higher lows, okay? Now, how do we get this point? It's simple. If you look closely, you realize that this high is higher than this high, while this high is higher than this high, and this low is higher than this low, while this low is higher than this low. That's what we mean by higher highs and higher lows. And this is simply how the market moves, all right? It moves in ranges, higher highs and higher lows, higher highs and higher lows in an uptrend. While in a downtrend, we have the opposite, which is lower lows and lower highs, okay? So here in a downtrend, you see something different. You see, we have something like this. LL stands for lower low, while LH stands for higher high, okay? For lower highs, sorry, lower lows, lower highs, lower lows, lower highs. And how do we get to know this? You realize this low is lower than this low, while this high is lower than this high. This low is lower than this low, while this high is lower than this high. That's why we say lower lows and lower highs. This is how simple the market moves, okay? You don't complicate it. You don't try to add stuff to it. This is pure market structure, okay? This is a downtrend, and that's how it moves. If you go down to the 1 minute, you will see it. To the 2 minutes time frame, you will see it. To the 4 hours time frame, you will see it. To the 3 minutes time frame, you will see it. So this is simply how the market moves, okay? Now, this is it on candlesticks. You see, I had to draw out this line so that you should see how real it looks like, okay? You realize this high, this low is higher than this low. This high is higher than this high. This high is higher than this high. This high is higher than this high. This high is higher than this high, while this low is higher than this low. This low is higher than this low. This low and higher than this one. And that's how it keeps going. That tells you the market is in an uptrend. It's very simple. So in case you look at the charts and you don't understand what it looks like, just take out your path tool and draw out the lines, okay? Just draw out the line on the chart so you can understand exactly what's happening, if it's an uptrend or a downtrend, okay? All right, now let's take the next step, which is a consolidation market, okay? In a consolidation market, we have what we call equal highs and equal lows. So if you look closely, we are creating equal highs and equal lows. You see, this low is equal to this low and equal to this low and equal to this low, while this high is equal to this high, equal to this high, equal to this high. Okay, so that's how it is. And now on this trend, there is what we call support and resistance. So these equal lows are considered the support. So support is more like the floor, while resistance is more like the roof or the ceiling. Okay, so price is bouncing between the floor and the ceiling. Okay, so some traders do trade a consolidation market. So they buy during a consolidation market during when the price is at the support level, and they sell when it's at the resistance level. Okay, now there is one thing I want you to understand. In a downtrend or in an uptrend, there is what we look for: buy opportunities. Okay, we look for buy opportunities. And now I want you to understand something. But the first thing you need to record down, you need to write down in your notebook is, we buy in an uptrend. Simple. In an uptrend, you look for buy opportunities. Now, there is something you see here, the green line. We call it BOS, break of structure. Okay, so we'll talk about break of structure. Break of structure simply means where you have higher highs, HH. This point is a structural high. This point is a structural low. Okay, so if price breaks the structural high in an uptrend, we call it a break of structure, because price is moving up in an upward direction. Okay, so anytime price breaks the recent structural high, we call it a break of structure. You see, anytime price breaks it, it's a break of structure. So this is the actual point where we had the break of structure. Okay, here, don't forget. Okay, those are the points where we had the break of structure. Okay, this point, that's what we call break of structure. So in an uptrend, we look for buy opportunities, and what confirms the uptrend is still valid, we see break of structures to the upside. Simple and simple. Okay, now we take the next step, which is a downtrend. It's simple. In a downtrend, what are we looking for? Sell opportunities. Okay, if you are buying in an uptrend, you are doing what we call counter trend trading. All right, so if you are selling in the downtrend, it's a pro trend trading, which is very, very okay. It's perfect, because let's take, for example, you sell from here. Okay, you see price came back up but did not come back to where you entered, so you are still in profit. And price continues coming down, it came back up but did not come to where you entered, it means you are still in profit. As long as price is not coming back to where you entered, you are in massive profit. Okay, so in a downtrend scenario, we look for sell opportunities. Okay, now whenever price breaks a structural low in a downtrend, a lower low, okay, structural low, that's where we call it a break of structure. Okay, whenever price breaks that zone, we call it a break of structure. Now there is something that happens at times. Okay, so let me show you an example on real life. This is it on charts. Okay, you see, we are in an uptrend. Price took out this structural high. What happened? We had a break of structure. Price took out the structural high, we had a break of structure. Price took out the structural high, we had a break of structure. Structural high, break of structure. That's how simple it is. Okay, that's how simple it is. Okay, now I want us to look at something. There are times when you are in an uptrend and automatically you see price takes out the structural low. When price takes out the structural low, we call it a change of character. We call it a change of character, CHCOCH. All right, change of character. Now, you see, we're creating higher highs and higher lows, right? Going up, causing a break of structures. At this point, you see, we took out the last higher low. And when price took out this higher low, this is where it took it out. It caused what we call a change of character, which is a change of trend. Automatically, the trend has changed from an uptrend to a downtrend. You see, the next high that was created is lower than the previous high, telling you we are now creating lower highs and lower lows. So mark this down. It's very, very important for your trading journey. Without this, you will never become a profitable trader. Like never. I mean it. You will never become a profitable trader because you don't understand market structure. And trading to become profitable comes with understanding of market structure. Okay? So once you have a change of character, you can call it anyhow. You can give it any name you want to give. The name doesn't really matter. It's understanding that matters. So you might forget all the names I'm giving you, but once you understand that in an uptrend, price doesn't take out the structural lows, okay? It doesn't take them out. Once price takes out your structural low, it means you've had what we call a change of trend. At that point, you start looking for sell opportunities, while in an uptrend, you look for buy opportunities, okay? Now, this is it in real life. You see, we were creating higher highs and higher lows. And what happened? Price took out the last higher low, creating a change of character. You see, the next structure that came out became lower than the previous one, telling you price is now dropping. We are now looking for sell opportunities. I think it's making some sense to you guys. This is it on real life, on real charts in real life. Okay? So that's how simple you have to understand market structure. Without this, like I said, profitability is far, far away from you. Now, if you look closely, on those charts, there is what we call internal trend and external trend. Okay? For you to create a trend, let's say on the 4 hours, we'll talk about time frames on in our next class, so do not forget to subscribe and follow for more, because I'm going to be dropping these lessons back to back. Okay, this video wasn't supposed to be long, but we don't have a choice because you need to understand exactly what I'm talking about. So in case you want to trade with me, there are links in my description to join my free community, and you will learn a whole lot from me. I even give free signals, and the broker I use, the links are also in the description. So let's get it going. So I'm talking about internal and external trends. Okay, you see this small trend within where you're having lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and you have an internal change of character. This is what we call an internal trend, the small one inside. Then the measure trend is this one. You see, measure, measure. But the internal trend is also very, very important, because this internal trend is a whole trend on the lower time frame. Okay, it's a whole trend on the lower time frame. That's why you need to understand this. On our subsequent videos, I will break down what an internal trend and external trend really looks like, so that when I will teach you top-down analysis, and when we're breaking down top-down analysis, you will understand why you need to take the internal trend very, very serious. Okay, so like I said, we have internal trend and external trend. So the internal trend are these small trends you have inside a measure trend. Okay, so it's the same thing in a downtrend. Okay, so guys, I really, really do appreciate, thank you all for being part of this class. Okay, I love the fact that you've watched all the way to the end, and honestly, if you've watched to the end, it means you are ready to take your trading serious. So subscribe to the channel and let's see how our next video will look like, because it's gonna be another banger, guys. You're gonna love it. Okay, so see you on the next video. Catch you, see you at the top, and I believe you're going to be a profitable trader after watching the whole of this series.